If I traded it all, if I gave it all.
I'm going to go right in with my next guest because there's lots to talk about, who's also been on my show many, many times. I have with me David Fisher. He is the CEO of Landmark Capital Gold Group. Welcome back to the show. I want you to tell everybody, so much is going on in the market, what you do, but your side of it, and what's going on.
Well, first of all, what you do is be simple, is to not have all your eggs in one basket. That's how you get hurt in a market. I don't care what kind of environment we're in. Not all asset classes rise at the same time, and people who are properly well diversified, which is, in my opinion, precious metals, cash, real estate, and stocks and bonds. Don't have all your money in stocks and bonds, especially now. So if people would follow this principle in 2007, they weren't hurt significantly by 2008 because gold went up to offset the other two downturn areas, real estate going down 40%, stock going down 40%. Now stocks were taking off and gold took a breather. Now we look like we're going down in stocks and gold is getting ready to take off. The stock market's down 6% so far this year to date, and gold is up about the same. So that's the asset class and the formula to have in a well-diversified portfolio that will really save you from a lot of grief.
Okay. Now, today, we have some new things going on, okay, that you want to talk about. Number one, do you want to talk about how they can do all of this, about the rolling over?
Yeah, we can talk about that up front, sure.
Let's do that because it's kind of neat, and I want to give it away. We've never been able to because this is neat. This is a new package that you've put together. Go ahead.
We figured out a method where you can roll over your retirement into physical precious metals. And we've been doing this. I've been doing these for 6 years. I've been doing retirements since 2001. But where they can actually take physical possession without a tax liability. And so I get a lot of questions on, well, how does that actually work? So out of the abundance of these questions being so intrusive of like, I got to spend lots of time with people, I thought, you know what? Why don't I put together a detailed white paper? I do believe in consultation, and we have a free consultation. So I thought, let's make this simple. In their own kitchen table, they can read this free white paper. And all the research I've done and looking at my competitors, our prices are significantly different. The LSCs that you use to set up this is $385 out of state, $350 in state. My competitors are $995 to $1,995, and this is done by a lawyer. We don't do this, but we have the turnkey operations. But in looking at my competitors, I couldn't find any piece of literature in scouring the country, and obviously I've been doing this for 22 years, so I know a lot of my competitors. So I said, why not be the first? Put something together that's a very simple roadmap that explains, here's what an IRA is, here's how you take physical possessions, the mechanisms that are done, here's how you can roll over your current plan and what are qualified plans to do that, and here's the legal precedents on the IRS and you allowing this. And it puts it all together, and some commonly asked questions that get asked, how do I do RMD when I have precious metals? And it's really detailed, and it's probably one of the best pieces of literature I put together in 22 years.
I love it because it's beautiful, number one, and number two, because it says private storage, which I love the way you put that. A precious metals IRA is as easy as 1, 2, 3.
It really is.
It really is. And so what we're going to do is we're going to give everyone this. We want everyone to call in. Even if you don't think it's for you, you may know somebody. This is very important. Our number here is 602-277-5369. Toll free, it's 1-866-536-1100. You're going to get this. You're also going to get his coming bail-in, how to avoid it from you, which we're going to talk a little bit about that too.
That's in its 4th edition. If you notice up at the top right-hand corner, it's the 4th edition of print. This is significantly different than all the 3 editions. What I've done is doubled the report, not to just give out information, but what I did is every time I research for the next printing, I look to see what is new. And the last time we printed this was January of 2015. Well, in January of 2015 till now, there's more information that's happened in 2015 than the previous years combined from 2008 to 2014 about how the government wants to seize your portfolio called an IRA or 401k. And so I put in a lot of information of the timeline, and you'll see this if you're looking at a stock chart, it ramps right up. I mean, the government is clearly moving. Whether they'll do this or not, nobody knows that. I don't even know that. But they're clearly now, more than ever that I could even imagine after this last research, that they're moving towards seizure of assets.
Now, our number here, you can call in for it. Our number here is 602-277-5369. Toll free, it's 1-866-536-1100. You can also call them direct. It is 602-287-9200, or check them out on landmarkgold.com. Okay. Today, we are talking about, where's my paperwork here? We're talking about what? Okay. So, we're talking about the government already did a bail-in, okay? Yeah. Which you've been talking about on my show for a long time. You've been predicting.
I've been talking about how there's been government bails in the last 5 years, 14 countries. What I didn't really put together until this last report is it's already happened in our country 5 times. Our government has gone into government funds already 5 times. Let me give you the nuts and bolts. They tapped into the government fund called the Treasury did this on December 27th, the Federal Employee Pension Reserves, to the tune of $185 billion. May 17th, the next year in 2013, they took from the Social Security Disability Fund, or the Civil Service Retirement Fund, whichever you want to call it, $260 billion. And at that point, that fund became insolvent, the disability fund. So keep that in mind. I'm going to say something, comment on that. In 2014, the next year, February 10th, when the debt was $18.1 trillion, we were fighting over raising this budget, and they created a Temporary Relief Extension Act to suspend the debt ceiling and spend as much money as they want. On that day of February 10th, the government seized $48 billion to as much as $146 billion. They weren't transparent this time, so it's kind of, in our detailed research, it's somewhere between those two numbers that the Treasury took from the G Fund. The G Fund is the Postal Service Workers Retirement, okay?
Well, no wonder they're crazy.
Yeah.
No, I'm only kidding. Go ahead.
March 16th, the next year in 2015, they took $195 billion from the Thrift Savings Plan, also a portion of a segment of what you call the G Fund. And just a few months after that, June 30th, same year, 2015, they took $23 billion from the Currency Stabilization Fund and $20 billion from the Service Retirement and Disability Fund. Now I'll comment on that. In 2016, the trustees of the Social Security Administration came out with their annual report looking back on 2015, and they said the disability fund will become fully insolvent. There will be no more money in it by the end of this year.
Wow, isn't that scary? To end on that note.
It's reality. See, the problem is this. Nobody wants to face the reality of our debt. You and I cannot spend the way we're spending. Our politicians are not even really talking about this. They've mentioned it when the question comes about. But this is going to be a day of reckoning sometime, because it already has been a day of reckoning in the European countries, but they did something about it. Unfortunately, here's what has happened, and we'll come back after the break and talk about this in depth. Our government in the end of 2015, started shifting the focus from their funds to retirement funds. And in February 4th of 2015, President Obama came out 9 months in advance of a budget. Usually he doesn't even come out with a budget, but 9 months in advance he says, we're going to focus, the number one thing we're going to focus on the budget is retirements. Why is that?
They do free consultations. Everybody should be talking to them, finding out where you stand. Definitely, you should not put all your eggs in one basket. And you can either call here. Our number here is 602-277-5369. We're going to give everybody the private storage. A precious metals IRA is as easy as 1, 2, 3. We're going to give everybody that. Also, the white paper that is doubled in size since last year. And that's on the coming bail-in. So everyone's going to get that. You can call in here. You can also check him out. It is landmarkgold.com or 602-287-9200. Give him a call again, 602-287-9200. He'll do a free consultation.
If I traded it all, if I gave it all away for one thing.
You know, every time you're on, I don't care if it's just people here in the station or listening, we all listen up. And I want everybody out there to listen up because, David, you really are all about educating those people out there, and that's all you want to do. You want to help them make the decision, not for them, with them, as to what might be right for them.
You know, since the last time I was on your program, just a couple weeks ago, I've had 4 national talk show hosts call me and saying, I want to have you
They're
on my
listening to
program.
me.
Yeah, they are. Somebody.
Go
Somehow it keeps getting out there where they want to hear this information because you're not going to pick up the paper and get all this thing put together. But what I do is put all the pieces of the puzzle on the workingness of the government or the lack of it working together to facilitate a financial stable economy. We're in a global recession. Just not many people want to admit it. The trade is down between countries. Currencies are down foreign, like China. Japan just went to a negative interest rate. They're the 4th country that went to a negative interest rate. Sweden, Switzerland, and I'm blanking out the third one. Sweden, Switzerland, Denmark, and Japan recently went to a negative interest rate. So let me ask you a question. Would you put your money in your bank and pay them to hold your money?
No.
Well, that's what this is. The Federal Reserve in September, Janet Yellen talked about, before they raised rates in December, talked about having negative interest rates. And the conversation went over like a lead balloon. The markets came down just by her talking after this speech. So darned if they do, darned if they don't is what I've been saying. The Fed has backed themselves into a corner. I've been saying this for 9 months. We're in volatile markets because there is no way out of this to take care of our debt. But yet they're talking about another quantitative easing program. And I said that we're going to come out. I've said so many times in your program, watch, you're going to have a quantitative easing program come out. They're not going to talk about it as such, but they're going to. That's in essence what it's going to be. Well, so what is the QE program? Injecting a lot of money into the economy. That's what QE did. Injected in the stock market. Many experts say, hey, the stock market wouldn't have performed if it wasn't for the Fed doing quantitative easing. So if you are forced to put your money out of your bank account and somewhere else, like the stock market, that's quantitative easing. And that's what's going on right now. When Japan raised or lowered rates negatively, the market surged for one day. Why? Because all this money on a corporate bank sheet was required to do something, otherwise they're going to get charged. So they put the money in the market. And they entice people to buy their stock by creating higher dividends, paying them to hold their stock. But you know the ironic thing? They didn't sell any new product. They didn't sell a new service. They didn't create any more profit for themselves. They just were forced to move their money. Quantitative easing. So there's 4 countries so far, and now the Fed is actually in their 2016 stress test. The article came out on Bloomberg today. They're saying, let's see what would happen in the United States if we went to a negative rate. And
How would that work?
it won't. That's what they're saying already. They're trying to figure out if this will work, and they don't think it will, but they're putting this out to the banks and a stress test. And ironically, just today, the 3-month Treasury went negative to a 0.5. It's a minus interest rate.
So we don't want everybody to go crazy because I want to, you know, because in my mind, I'm sitting there thinking, well, gosh, you know, whatever I have, I'd want to take out of the bank because you never know when they're going to just say, this is what we're going to do. You have no choice. We've taken it. Because they do things like this.
That's what this is all about. The government and the Fed is forcing people to do something different with their money. Because if they don't do something different to support the economy or support the dollar, the government's going to have to go into people's funds and seize their money to support the economy and support the dollar. And that is the bail-in that's getting ready to happen.
For people that may have not heard you talk about this real quickly, just to recap.
Simple as this. It's happened in, like I said, 14 countries five times, or in the last 5 years, where countries went into their citizens' bank accounts and or pensions and retirements, seized a portion of it, sometimes all of it, and gave them a government bond or a note in return to pay them back over time, kind of like Social Security, okay? And And they use that money to to pay down the debt, to get their debt to a manageable level on the government level, and to shore up their currency. So it works temporarily if they go into what you call physical austerity, if they live within the new means of this new balance. But what happens is most countries don't do that. And that's why you saw this happen multiple times in Greece. That's why they've revolted. So, but if every country that's only done it once, it was a good thing for them, the country, not necessarily good for the citizens, although most of the time the citizens got paid back. Well, our country is saying this is a solution that will work. In fact, the International Monetary Fund says America should do it, and it will work if they do it properly. Yet the number is 56 to 71%, according to the Wall Street Journal article called The Coming Global Wealth Tax. So this is where we say there's too many pieces of the puzzle. It says this picture is really clear. Take some money off the table. Ironically, this is a good thing of a good investment, too, at the same time. Gold is moving up while stocks are moving down. Transfer out of some of your assets that are going down into an asset that's going up, and the government can't seize it through a bail-in because you're not in an electronic fund anymore or in a bank account. You're in physicals, and that physical is in your hand, and that's why we wrote these two white papers.
And we're going to give everyone them. Our number here is 602-277-5369. Toll free, it's 1-866-536-1100. You can also call him direct at 602-287-9200, landmarkgold.com. Go ahead. I want you to be able to get out everything, and I know you do, but there was something that you were on the last time that was hot, that when you said a lot of people are asking you, Carol, a lot of people are asking me this, we're getting calls, and I don't remember what it was, and I just want you to be able to tell them what, because I know you get that question a lot.
People are they're trying to get their arms around this, because they're saying, how can this really happen in America? Well, they passed a law called the Dodd-Frank Act in 2010. It became a law where they can do this. And ironically, most people don't understand that. They don't have to take my word for it, although they can read the report, but everything I have in the report is documented. They can go to the government website called FDIC.gov, and you can learn about this bail-in through the Dodd-Frank Act.
And he's also going to do a free consultation with you. Again, you can call here or call him at 602-287-9200. Go ahead.
You know, some people say, is it really going on this way? Well, recently, the European Union Commission, they're taking legal action against 6 European countries. And these 6 European countries chose not to follow and implement bail-in procedures in the future. Now, there's a lot of countries that already this happened in, but there's other countries that the European Union is saying, if you're going to be part of the Union, you have to implement these bail-in procedures in your country. Implement them just like, and they listed the countries, UK, Canada, Australia, New Zealand, and the U.S. all have plans for the bail-in the event of banks and other large financial institutions get into difficulty. So if you do some research, just Google this. It's all over the Internet. People are not putting the pieces of the puzzle together because if they did, it would cause them to be engaged in their money, and it would cause them to make a change. Change is not always a bad thing. If you knew a stock was going to go down a bunch, you would probably not hold on to it, right? Okay. If you knew that stock was going to go down and the government was going to intervene and not allow you to get out of it, you would definitely get out of that, right?
Right.
That's what the bail-in is. Stocks are going down, and the government is looking at a way, and they're focusing on people's asset classes called retirements. And this is why the Treasury wrote a 16-page wish list on what they want to do this year in people's portfolios in retirements. This is all public news on the Internet.
Well, you know, when you first came here today, I asked you, well, gosh, you know, it seems like what happens with the government when they are in debt? And, you know, what did you say? Because they never get calls from people that are calling them saying, where's my money?
Go to the government website called the National Debt Clock. Click on unfunded liabilities. You'll see $100 trillion. Why are we $100 trillion upside down? Because the government's been robbing from funds, like I've been saying. They've been making commitments they cannot keep. And someday this is all going to come, a house of cards is going to come down. I'm not saying the whole thing is going to crash and we're going to live in, archaic times and cavemen. What I'm saying is it's going to affect our lifestyle, something greater than 2008. Maybe not the same way, but it will have a very significant effect on our lifestyle. Ask the people in Europe if they were not affected by a bail-in. Ask them if they didn't have the warning signs. There's more warning signs in the United States than there is all combined of the 14 countries. We're just not paying attention.
Well, I hope you guys are paying attention right now, and I hope you enjoyed listening to him. I always do when you come on. It's always fascinating. And we're going to give everyone, and I'm going to let you call throughout the rest of the show for this. It's it's how to get your IRA rolled in, your into your what is it?
How you roll over your retirement and take it physically in your possession and have it being qualified money, not a tax distribution, through having an LLC set up properly.
Everyone's going to get the paperwork on that, so you can learn about that. It's as easy as 1, 2, 3. Also, his white paper that is doubled in size on the coming bail-in, so you can have that. Our number here is 602-277-5369. Check him out. Go on that website. It's landmarkgold.com.